Financial uncertainty, it's something we all face as tariffs take effect and the stock market responds. I'm Colin Dorsey, and today I'm joined by Ian Rhoades, who works in investor relations, and we're here to talk about the stock market and how to protect your money. Well, Ian, today we saw that drop in the market as things opened, and it's mostly recovered. Then we saw that dip again. So we've seen a lot of volatility since it opened today. And for the average person who isn't always in tune with the market, but may have the retirement or savings tied up in there, what are they looking at today?
So the first thing to know when you're talking about the stock market is that it is not like the supermarket. So the supermarket, the price of apples might change once, twice a week. The stock market, prices are constantly changing, and they're going up and they're going down. So that is not something that is unusual for that, okay? So what's happening right now is that the size of those changes are larger than normal. So the volatility is up. When we think about volatility and we think about how prices are discovered and how prices happen in the stock market, we've got buyers and sellers. So what's good right now is that the buyers and sellers are still meeting each other. So the market is working. So this is actually a very normal thing for the stock market to be displaying. And when we look at valuing stocks, we have prices and then we have earnings. So if we look at the price to earnings ratio, which is a common way to value stocks, we look at the kind of vibes that drive the price, and then we look at the earnings, which is something that's more technical and something that investors will maybe put into an Excel model. And that's where things get really complicated. So we won't go there. But when we look at tariffs and how that is changing the economy, what these investors are doing is they're putting these tariffs into their models, and their models are suggesting that earnings might go down. And so if forward earnings are going down, and we are, in this moment where the vibes are kind of standoffish, we have that PE that we go back to, and that is deflating. So the prices are going down based on those earnings, and then also based on the uncertainty that the tariffs are creating.
Yeah, and today we're already on track to see the NASDAQ have its largest intraday price swing since 2008. So I think the big question here is, how much is fear playing a part in this today?
Fear is playing a large part. So you have investors, like I said, trying to rejigger what they think is going to happen in the future, and they don't know. So everything keeps changing so quickly that CEOs who are trying to make decisions about what to do with their companies, should we build a new factory? Can we hire those 10 extra people? They don't know what to do. So they've taken a timeout. And during that timeout, the economy kind of goes on pause. And when the economy goes on pause, we could dip into recession.
Yeah, and obviously in your position in investor relations, you deal a lot with talking and conveying these messages from corporate executives. Is this a scary time for these companies?
I think that it is a time where we have policy change that is occurring that we don't normally see. So with that uncertainty, yeah, there is a little bit of fear out there. What I would encourage folks to do is maybe set a reminder in their phone for 3 to 6 months from now. Let's take a time out. In 3 to 6 months, come back, look at your financial portfolio. Then, when things are more calm, we can take a look and say, okay, is what I have right now right for me? Do I need to make changes? But making a change when you're in kind of a crux moment isn't necessarily the best time to do it, like shopping for a car. If you shop for a car while your car is still fine, then you might have the ability to find a better deal. If your car breaks down today and you have to go buy a new car, you could end up with less favorable terms.
Yeah, and we kind of mentioned it there that, the stock market in your portfolio, it's a long-term game. We're not talking taking a look and making these very rash decisions. But as we look at the numbers today and what we've seen this past week, is this a good time for people to buy and make changes?
When you look at something like the volatility index, so you just mentioned that there are wild price swings that are happening, the largest that we've ever seen. If you look at the volatility index, the VIX, that is a fear gauge. And so what that fear gauge is telling us is that folks are buying options into the stock market, which are telling us that these price swings will continue right now. So when we think about price swings continuing, that is just further edging up fear. Now, if you go back and look at history, in moments where the volatility gauge is this high, those can create good entry points because everyone is having this conversation all at the same time. And so what we want to do is be calm-headed, we want to be cool, and we want to think about, to your point, what does this look like 10 years from now? What does this look like 30 years from now? Even if there's uncertainty today, how do we feel about it in the longer term?
Yeah, and for the folks who may not be looking at 10, 20 years down the road and they're planning for retirement maybe in the next year or two, is there anything that they should do right now in order to protect themselves, or is it just wait?
Taking a moment and taking a breath when things are moving this fast is the best advice. So, pause, slow down, and look at things in, a month or two, or like I said, even a longer period of time. So I wouldn't encourage anybody to make long-term decisions right now.
Gotcha. And we've also talked about in the past what tariffs are, what they do exactly, and how these announcements can have effect on the markets. In the grand scheme of things, why would something like this be such cause for fear in the markets?
A tariff is a tax. And so a tax increases the price of goods. So when goods come into this country, they are now going to be taxed higher. So anything that you or I buy, whether it be avocados from Mexico, whether it be a car that was made in Canada, whether it be a suit that's made in India or something like that, those will all be more expensive because of these tariffs that are being levied on the goods coming into the country. What is true is that other countries around the world do have tariffs on our goods. But having a tariff for tariff may not be good for the economic growth. If there's a country or a company that is good at manufacturing something in a place that is not the US, if that is lowering the cost for you or I, that can be a good thing. It can mean that we can afford more. We can have more goods. We can have more prosperity. And if we have that greater prosperity, everyone can benefit from that. But if we have taxes which can drive down productivity, it can drive down prosperity, then that could send us into a negative spiral if we're all doing that across the world, and there could be less prosperity and less wealth.
Yeah, and as we talk about that prosperity, a lot always rides on a company's stock price and those decisions that executives have to make, and whether that be layoffs, acquisitions. Is it too early to start thinking about those things?
No. Companies will be taking this into account real time. Companies are constantly making decisions about the future. Nothing is static. Things are constantly changing. Shareholders demand more revenue next year than you had this year. They demand more profit than you had this year. Or they'll take their dollars to somebody else who will go and do that.
And there's been a lot of chatter now with looking at these dips over just the past week. People are talking about recessions. Is that also something that is on the table right now?
It is on the table because as that prosperity that we just talked about, as those barriers to trade get put up, that is economic activity that we're losing. So the economy is losing that trade activity. And as that's gone, it's very hard to make it up. So that is a real possibility right now.
Yeah, and this kind of just one final question to wrap everything up. For those people sitting at home who are watching, basically watching that ticker right now fluctuate up and down, what are, kind of some final last minute common sense advice you have for folks just trying to protect their money right now?
Pause, take a moment, take a deep breath, set a timer on your phone, look back in 6 months from now, then take a moment to think about it. The best time to approach long-term financial planning is not in the moment where we have volatility that's at a decade high. It's better to approach it when we have got blue skies, when things are more calm, when the stock market is acting a little bit more normally. The stock market is functioning fine right now. Understandable that this is a scary time as prices are going down and going up. What does that mean? It's okay for that to be kind of confusing, but take time and then think about it over the longer term.
All right, Ian, thank you so much for joining me today. That's going to wrap us up for our discussion today. Of course, we continue to keep a close eye on how this all involves, and we'll bring you the latest here on 10 TV.